Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today's first segment is a significant one for the real estate industry in Ontario. The Real Estate Council of Ontario has ordered iPro Realty Ltd. To shut down due to financial mismanagement. The company reportedly employs 2,400 real estate agents across 17 different locations, including major areas like Toronto and Mississauga.
That's a huge number of agents and a lot of communities affected. It must be quite a shock for both the agents and their clients. What exactly led to this shutdown, Steve?
Well, Janine, according to the Real Estate Council of Ontario, there was a significant shortfall identified in iPro's accounts during a scheduled inspection. This shortfall was initially more than $10 million, though it's now reported to be under $8 million. It's a serious breach under the Trust in Real Estate Services Act.
That is concerning, especially when you think about all the buyers and sellers who might be caught in the middle of their transactions. What should they do now?
For those currently in transactions with iPro Realty, an independent individual registered with the Real Estate Council of Ontario will act as the broker of record to oversee the completion of these transactions. It's advised that clients contact their real estate agent directly for guidance and, if needed, speak with the management of iPro.
It's good to know that there are measures in place to help ensure transactions can still be completed. But what about the agents? They must be worried about their future now.
Absolutely, Janine. The agents from iPro Realty will be looking to transfer to new brokerages. Interestingly, iCloud Realty has already stepped in to acquire some of iPro's assets and assume some of their leases. The Real Estate Council of Ontario is facilitating a bulk transfer of agents to iCloud Realty to ease the transition.
That seems like a positive step forward for the agents, allowing them to continue their careers without too much disruption. It's a reminder of how resilient the real estate community is.
Let's talk about the recent trends in Ontario's housing market. According to a report by Wahi, a digital real estate platform, home prices are on the decline in several communities across southern Ontario. This is quite notable, especially for those looking to enter the housing market.
That's right, Steve. It's an interesting time for potential home buyers as prices have softened in places like Hamilton and Toronto. For instance, Hamilton saw a 5% decrease in the median price for a single detached home in the second quarter of this year.
And Toronto's median home prices have dropped by 4% since last year. It's a trend that seems to be affecting several areas. Belleville and Oshawa also experienced a 2% drop in the average price for single detached homes.
It's important to note that while these price decreases might tempt buyers, it's crucial for them to consider their long-term plans. Buying a home isn't just about the price at the moment, but also about where you and your family want to be in 5 or 10 years.
Exactly, Janine. Ryan McLaughlin, an economist at Wahi, pointed out that despite the price drops, some areas like Toronto have seen an increase in real estate transactions. This suggests that buyers are still eager to purchase, possibly seeing this as an opportunity.
Yes, and McLaughlin also mentioned that more homes are selling below their asking price, and properties are taking longer to sell. This might be a good time for buyers to negotiate better deals, but they should also be cautious of overextending themselves financially.
That's a good point. With the market softening, it's crucial for buyers to evaluate their financial situation carefully. The drop in condominium prices in the Greater Toronto Area is another factor to consider, as it's partly driven by an increase in supply and other economic factors.
And let's not forget that rents are also declining across Canada, especially in southern Ontario. According to rentals.ca, rents in Toronto dropped by 4.7% year over year. This might influence some people's decision to rent instead of buying, at least in the short term.
Ultimately, whether to buy or rent depends on individual circumstances. As McLaughlin suggested, it's not about timing the market, but rather ensuring that the location and property align with one's long-term goals. High transaction costs can negate any short-term gains if someone needs to move within a few years.
Absolutely, Steve. It's a time for careful consideration and planning. Buyers should weigh all their options and perhaps consult with professionals to make the most informed decisions. In the end, it's about finding the right fit for their lifestyle and financial situation.
Let's shift our focus to the latest report from the Financial Services Regulatory Authority of Ontario, which has revealed some interesting trends in private mortgage lending. Despite a slight decline in 2024, private lending remains a crucial part of the housing market in Ontario, especially for borrowers who face affordability challenges.
That's right, Steve. Private lending can be a lifeline for those who might not qualify for traditional financing options. It's essential for borrowers to have access to a variety of financial solutions, especially in today's fluctuating market.
The report highlights that lower interest rates have led more borrowers to seek traditional mortgage options, which has contributed to an overall increase in mortgage activity across the province. However, private lending still plays a significant role.
It's interesting to see how the market dynamics are shifting. Antoinette Lung, Executive Vice President, Market Conduct at FSRA, emphasized the importance of ensuring that both borrowers and lenders are well informed about the risks involved in private lending. It's crucial for long-term financial stability.
Exactly, Janine. The FSRA has been focusing on private mortgages as a supervisory priority due to rising delinquency rates and the financial pressures faced by vulnerable borrowers. The regulator aims to ensure that consumer protection efforts keep pace with emerging market risks.
It's reassuring to know that FSRA is actively working to protect consumers and maintain fairness in the market. They utilize data from Terranet's LendView platform to get a comprehensive view of mortgage activity, which helps them in their oversight and consumer protection efforts.
Indeed, Janine, it's all about maintaining a balance between providing opportunities for borrowers and ensuring the market remains stable and fair. With the FSRA's focus on transparency and education, borrowers can make informed decisions about their financial futures.
Ultimately, it's about giving consumers the choice and ensuring they're protected. Private lending can be a valuable tool for many, but it's important to have the right guidance and information to navigate the complexities of the mortgage landscape.
Let's dive into some important developments from Ontario's housing sector. The province's housing minister, Rob Flack, has announced his intention to make changes to a housing fund aimed at assisting municipalities with building projects. This announcement was made during a speech at the Association of Municipalities of Ontario conference in Ottawa.
That's interesting, Steve. It sounds like the changes could impact how municipalities approach housing development. What exactly is this fund and how does it work?
The fund in question is the Building Faster Fund, which rewards municipalities that meet at least 80% of their assigned housing targets. The money provided by the fund is used for housing-enabling infrastructure, which is crucial for supporting new developments.
I can see how that would be beneficial. But I've heard some municipalities are expressing concerns about how progress is measured. What's their main issue?
The main concern is that the fund's rewards are based on when construction starts, which municipalities argue is unfair. While they handle approvals, they don't control when builders begin projects. This has led to frustrations for some communities that feel they're being penalized for factors beyond their control.
That does seem a bit challenging, especially for smaller towns where there might be fewer developers. It's good to hear that Minister Flack is open to consulting with mayors to address these concerns. What changes is he proposing?
Minister Flack has indicated that he plans to extend and improve the Building Faster Fund, though specific details are pending further consultations. It appears he's aiming to create a more equitable system that better reflects the realities faced by different municipalities.
It's reassuring to see a willingness to adapt and improve the system. With Premier Doug Ford's goal of building 1.5 million homes by 2031, It's essential that municipalities have the support they need to meet these ambitious targets.
Absolutely, Janine. In addition to the changes in the Building Faster Fund, Premier Ford announced a significant boost to the Municipal Housing Infrastructure Program with an additional $1.6 billion. This is a clear signal that the province is serious about accelerating home building.
It's a substantial investment, Steve. Hopefully, these efforts will help municipalities overcome some of the barriers they're facing and ultimately lead to more homes being built across Ontario.
Indeed, Janine. As these changes unfold, it'll be important to monitor how they impact housing development throughout the province. The goal is to create a system that not only incentivizes growth, but also supports communities in achieving their housing objectives. In recent news, the Financial Services Regulatory Authority of Ontario has concluded its enforcement action against mortgage agent Viviana Prentice. The FSRA has imposed a $30,000 administrative penalty and conditions on her license. This action is part of the regulator's ongoing efforts to crack down on industry malpractice.
It's crucial for the integrity of the mortgage industry that such actions are taken. What exactly led to these penalties, Steve?
Well, Janine, the FSRA issued a notice of proposal against Prentice back in December 2024. They alleged that she contravened the Mortgage Brokerages, Lenders, and Administrators Act, 2006. Specifically, she received remuneration from someone other than her brokerage, which goes against Ontario Regulation 187/08.
That sounds serious. How did she manage to receive these fees, and what was the impact on her clients?
According to the FSRA, Prentice charged certain clients a fee that was agreed upon by the customer and signed via direction of funds agreements. These fees were paid directly to her or through legal representatives, totaling $34,050 in 10 separate transactions. However, these fees were not remitted through her brokerage Mortgage Connection.
That's quite a significant amount. It's concerning when clients might not fully understand who they're paying and why. How did the brokerage respond to this situation?
Mortgage Connection discovered the fees and subsequently terminated Prentice on January 16, 2023. They retained 15% of the fees received as per their agreement, but Prentice benefited to the tune of $5,107.50. After the breach was uncovered, FSRA investigators interviewed Prentice in August 2024, where she admitted to breaching the act and took responsibility for her actions.
It's important that she took responsibility, but the impact on her clients and the trust in the industry can't be overlooked. What was the outcome of the FSRA's proposal to revoke her license?
Initially, the FSRA proposed revoking her mortgage agent license and imposing administrative penalties totaling $50,000. Prentice requested a hearing before the Financial Services Tribunal, but withdrew that request on July 24th of this year, leading to the current penalty and license conditions.
It's a reminder of the importance of transparency and compliance in the industry. Clients need to feel secure that their agents are acting in accordance with regulations. Hopefully, this serves as a lesson for others in the field.
In our final segment today, we're turning our attention to the latest developments in the currency market. The Canadian dollar has hit its lowest point in nearly 3 weeks against the US dollar. This comes as oil prices have dropped and recent inflation data has led to increased speculation that the Bank of Canada might cut interest rates in the near future.
It seems like a lot is happening with the Canadian dollar. The loonie is trading lower, and it's interesting to see how these economic factors are playing out. What are some of the key elements contributing to this decline, Steve?
Well, Janine, one of the major factors is the drop in oil prices, which is significant since oil is one of Canada's major exports. Additionally, we've seen Canada's annual inflation rate ease to 1.7% in July from 1.9% in the previous month. This was largely helped by lower gasoline prices, which have influenced the overall inflation figures.
That drop in inflation is quite notable. It's amazing how interconnected these economic indicators are. I imagine that investors are keeping a close eye on these numbers, especially with the possibility of a rate cut from the Bank of Canada.
Absolutely, Janine. In fact, the 3-month annualized measures of underlying inflation, which the Bank of Canada closely monitors, have decelerated to 2.4% from 3.4%. This has led to a jump in the probability of a rate cut at the next policy decision. Investors now see a 39% chance of a rate cut in September, up from 31% before the data was released.
It's interesting how quickly market expectations can shift. And with the ongoing discussions between Russia, Ukraine, and the United States regarding the war in Ukraine, there's potential for changes in oil supply if sanctions on Russian crude are lifted. That could have further implications for the Canadian economy.
That's right. The prospect of increased oil supply could put additional downward pressure on prices, further impacting the Canadian dollar. However, there is a bit of good news on the domestic front. The recent resolution of a strike by Air Canada's flight attendants could help stabilize some aspects of the Canadian economy.
It's reassuring to hear about some positive developments amidst these challenges. It's a reminder of how dynamic the economic landscape is and the importance of staying informed. As always, it's crucial for individuals and businesses to remain adaptable to these changes.
Indeed, Janine. As we wrap up today's episode, it's clear that the currency market and broader economic indicators are constantly evolving. Staying informed and understanding the potential implications of these changes can help individuals make more informed decisions in their financial planning. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.